There are going to be a lot of changes in this upcoming bull cycle than what we're used to. If you've been around in crypto since 2020 or even longer, this next bull cycle could look completely different. And in this breakdown video, make sure you guys stick around to the end because I think I've got some really valuable insight here for you based on some things I'm reading and hearing. I've kind of compiled some of my thoughts, some of the things that have recently come out in recent months to get you all prepared for what's coming in 2024 and 2025. If we do believe the bull run is coming again, to judge us all. No, I'm just kidding. If we do think it's coming, it's probably coming again in 2024 into 2025, right? Because of the 4-year cycle. So if that's the case, what's going to be dramatically different and how can we prepare ourselves as crypto investors to be ready for these big differences? All right, I'm going to talk right at you guys and break down. I've got some notes here right in front of me. I'm going to talk about just kind of what I think are going to be some big things, some takeaways, some key things to consider for the year ahead and into 2025. All right, so beware of overnight lenders. If you guys remember, Genesis, Voyager, BlockFi, and Celsius all went under throughout this crypto bear market, right? Again, as more users enter the space, old and new companies alike will try to fill the void left by these defunct crypto lenders. But as prices soar, don't forget to ask the right questions. Was this lender able to navigate 2022 without going bankrupt, without any hiccups? Are they a solid company? Have they been around for a while? Carefully look at each company because these lenders certainly will come out of the woodwork, and they're going to try to sell customers the same promises of high returns with little transparency or risk management than BlockFi, Celsius, Voyager, and Genesis did. So there will, again, be more fly-by-night opportunists trying to enter the market and trying to capture share within the next couple years. Here's another prediction. Bitcoin and Ethereum spot trading and derivatives volume is going to shift from unregulated venues to regulated ones, especially here in the United States. Until now, a large amount of the trading that has taken place is processed through unregulated platforms that many times did not conduct KYC, which we're going to get to that on the DeFi side later on in this video. So be ready for KYC, especially if you're in the United States. It's coming. We already know that there's changes to taxes happening, which again, we'll come back to a little bit later in the video. So this is going to come hand in hand with the introduction of regulatory clarity. So be ready as we get these spot Bitcoin ETFs. A lot of the volume is going to shift to regulated venues. So what does that mean? Well, spot volume will move from decentralized exchanges primarily to centralized exchanges. And I know a lot of people don't like that, but I think this is going to happen, especially in countries like the United States. Going to be moving away from Uniswap to venues like Coinbase and Kraken, the two that have pretty much everything they need in order to operate in the United States, while derivatives volumes like options and futures will move to the New York Stock Exchange for ETFs. Be ready. That shift is going to happen, in my opinion, and there's nothing we can do about it. Okay? Now, we're also likely to see, and I like this one, likely to see a resurgence of crypto debit cards, thanks to increasing regulatory clarity that hopefully comes within these next 2 years, and the continued efforts of big players like Visa, MasterCard, and Circle. They've been investing and working relentlessly in solutions that are increasingly more integrated with crypto platforms and digital assets. These solutions certainly blur the lines between digital assets and traditional payment rails, but it's good because if you got a company like Crypto.com and Kronos, that could be really well there, allowing users to spend their holdings directly without the need to actually transfer it back into a fiat currency before they can spend it. This is going to be certainly something I think takes grabs some big momentum in this next couple years. As the bull market gains momentum, another thing that we could see play out is layer twos getting bigger and bigger. Of course, we have the Lightning Network for Bitcoin, but also scaling solutions like Polygon for Ethereum. These are prime examples of technologies designed for the bull run, designed for escalating transaction fees, escalating number of people getting in, and these high throughput blockchains that can process a number of transactions per second like Solana is also probably set to grow in popularity as we get more and more expansion and growth in the cryptocurrency markets. These ecosystems could be looking to make a big splash. Another very fast blockchain with good throughput, Caspa. Keep your eye on Caspa and Solana, as well as Tron as well. I don't own any Tron, but Tron is another one. Now, what I think will happen too is we'll see CBDCs come back to the forefront. Governments will probably try to compete with these with their own central bank digital currencies. They'll try to compete with stablecoins, rather, with their own CBDCs. So far, CBDCs have not gotten a warm welcome from countries like citizens in countries like Nigeria and Bahamas, and I expect that trend to continue. People are going to push back on that for sure. This bull cycle will be markedly different from its predecessors in another way because of how unregulated the markets have been to this point. And worldwide, I think financial regulators are going to be coming to the fold, coming to the table here, and they're fully aware of these markets growing, and now they're taking it seriously. So I think there's going to be a lot of changes, and many of the platforms out there that have not asked you to KYC are going to ask you to KYC. And I made a video about this recently. I think this is great for crypto scams and scam artists because a lot of these people are able to deploy a contract and not KYC. When I file my taxes in the United States, I list every MetaMask wallet that I have. I KYC them anyways. But now we know that MetaMask is going to ask you to do that before you even sign up for a wallet and be able to transact and use it. So that's going to be a big shift. And I think this is going to cut down on bad actors in crypto. Because if you have nothing to hide, why don't you want a KYC? Right? And I get it. There are some other drawbacks there. I know. But this is going to happen, in my opinion. And we have to be prepared for these next 2 years. We'll see you.